Here's the 5-minute chart of crude oil today, and you can see what it was that I was looking for to buy. Now I didn't get there. It did not get there, and I wasn't able to buy it. But let's squish this thing out for you to see. So this was some sort of measure move strategy number 1-ish, okay, which means 38.78. Here's a 78. I'll take it from here all the way up to here. Now notice how it hit it pretty much on the nose. But yeah, again, I'm not leaning on 78. Here's a 38.78. Okay, so between these two lines is where this thing is. But I'm leaning on more of the extensions coming down. Okay, so as we see deep double top, deep high, high, lower, low down to here, I'm looking at 97.05, 97.09 to go long. Now, here's the thing that frustrated me this morning. I didn't get anything there locally, 97, call it 06, 05 or something here, to signify that it would be slowing down. Now, we're going to later show you what happened yesterday here, which was a better slowing down mode. Okay, so I'm going to go to the 1-minute chart and look at that leg, and the leg is from here down to there. Okay, so this leg here is what I did not get. I have a sometimes it'll come really cleanly. Okay, sometimes this leg here would give you perfect deep situation, like for example, like this is what I would want ideally. Okay, if I have something like this coming into here, okay, something like that, then that would be a very, very, I'm going to jump all over it. Okay, because if this thing goes 461 like that down there off of a deep, this zone is definitely got a big time long. But instead it came down. I mean, you can take a shot at it, but this is not so deep, double top, and here's a medium but right skew, so this is not the best looking entry. So could you say, well, you can short it here to take it down there? No, that could be it. That's why it would be dangerous to do that. Because if you were to look at, let's say, the double top here, okay, double top has hit the 461. This deep retracement has not, okay, but it came close, right? Well, not too close. So somewhere down here was my long. Actually, there was a sort of a interesting short over here. In other words, if this thing was not a big time long yet, then, and this is a shallow retracement, once it got above here, it has no business being up here. This is bar to bar, and then very shallow. Okay, now what the heck is it doing up over here above these highs? Could it go above this high? Probably not, especially when you have some left skew and some deep measurement within a measurable. This was some sort of shortable high, but you got to put a stop above these highs here, maybe write it down. You got to make sure that this long over here is not a big time buy, okay? Because again, the big time buy is a combo buy. It's actually a little lower than that. So this was not so good of a long. Let me show you one that was very good, and I was screwing around over here trying to get some small trades here when I missed it. I think Chad saw it too. Beautiful short in gold. Here's a 5-minute chart of gold day trade. Okay, now I'm going to go back to squishing it up even further. Okay, now these are very shallow retracements. Let me go to the 15-minute. Okay, notice how all of these were very, very shallow coming off the highs here. I know they're shallow, and I know we're going to, but here's shallow, but then this is a little deeper. Okay, This one is medium deep. Okay, now look at all these 461s from, I'll call this a dominant, and then there's some of these are stretched, some of these are short change. I'm on the 15-minute chart, okay? So as we take a look at this guy over here at the 78 zone for a bounce, you might think, no, I don't want to buy it. Why? Because the dominant is not very deep. Okay, dominant is not very deep over here. Even if this guy was nominated as a dominant, I think he got knocked out, but he's not that deep either, and he's shallow. Why would I be buying it over here? Well, here's why. Here's why. If you can only experience a 38% bounce, you know, that's still over $1,000. Even half of that is still good. Remember, if you're buying it down here at, you know, let's say 12.19 up to 12.29, that's $10, right? So that's the basis of trying to get something. Now, you want to get something locally down here. Now, I have these 461s, but how about down here? Okay, remember, this is shallow, this is shallow. So even if there's a bunch of 461s, even a 38% bounce would be worth it. But we still need to ask the question, can something else button it up tightly from, you know, down there? We don't want to be off of the 15-minute chart only. Okay, so we're going to go down to a smaller time interval. Sean has a question. Where do you have to stop and go? I want to show you in a second. Okay, so we're going to go down here in this last leg coming down. So I'm going to go from a 15 down to a 5. Now I have this general zone here, but you want to see how it comes to that zone. The zone is, this is medium deep, this is shallow, this is still shallow, or is it super shallow? But look, deep, deep, deep. This tells you it's slowing down. This type of deep, deep, and deep is telling you it's slowing down. Now, you want to make sure you can understand what you know, so how to size this thing up. Okay, in other words, once it gets below here, then we confirm this high as a shallow. When this confirms right there, below there, you can say, aha, we have one deep. Now here's another one, medium deep. Once it gets below here, we've confirmed 2 deeps. But do we just say below here I'm going to start buying? You could, because this type of deep, deep, and deep would give you this bounce. But wait a minute, you forget that this is on a 5-minute chart. What you want is even more fine-tuning of this last leg coming down. Okay, and this is where you may not need to do this. You may not need to watch this. If I'm going to do this and this, and I keep on doing that, I'm going to be so far down here that just by me leaning on the mathematical average, I'm going to miss the entry. Okay, so, well, do we take this guy's 461 down here? He is shallow. Or do we take this, not this guy, because he's deep, we don't need to take him? How do we decide? To say yes to this guy here as his 461, but no thanks to the rest of it? How do we do that? Well, this is where the 1-minute chart comes in. You can take the average of all of these and give you some sort of a zone, but if this is deep, deep, and deep coming in, it may not need to use all of these guys, like these guys way down here. So here's why I'm always on the 1 minute. This last leg over here. And again, I watched it a little too late. I could have still jumped on it, you know, Chad. Here's a 1 minute. This is what, okay, forget about all the 461s that are there for the time being. I want to focus on this. Deep, a measurable with a measurable deep, 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 and deep. Okay, I'm going to open it up so you guys can see. Now I'm eyeballing this zone down there. Once it gets down there, I can say to myself, oh my goodness, I think this guy has gone 461. All right, fine. What else? The guy right before it is right over here. And before that, right over there. Okay, these are all deep, okay? Here's another one. Here's another. This one is pretty deep. Measure move within the measure move. Here are the 5 461s that I like. Okay, you take these 5 guys and average it out. Now, chances are this 5 of them in a row will keep this thing honest. Now, you might argue, wait a minute, this last guy looks like it's very, very shallow. Okay, this is where you can kind of fudge around a little bit here and say, well, you can take that, or you can even throw one more in. If you do that, you could risk missing it if you average this guy in. Okay, but if you take all these numbers and you can massage it, knowing that there'll be a nice bounce. I'm going to take the average right now with my calculator. The 6 numbers: 13.2, 14.9, 17, 17.1, 17.8, 18.6 divided by 5. This gives me no, I think I made a mistake. 13.2, 14.9, 17, 17.1, 17.8, 18.6 divided by 6. I get 12.16. 12.16. Now the low, 12.16.3. I'm sorry. Let me average it using my Excel. 12.13.2, 12.14.9, 12.17, 12.17.1, 12.17.8, 12.18.6. Notice I get 12.16.4. What was the low? The low is 12.16.3. So right there, you're within a tick. If you take even this guy's 461 into the average, there's 12.16.4. Okay, now, do I need to massage this in with all the other bigger 461s? In other words, should I take all these 6 numbers and then, wait a minute, the other ones could be massaged down a little bit? Well, if you have 5 of them, 6 of them, 6 numbers here hanging on so tightly, you could, buy it here, primary entry. Now, this was a very strange secondary entry. It did not do a higher high, lower low, and then drop. It just dropped. So I was staring at it when it was right around here. Actually, I should have jumped right in the market, because once you drop into the market over here, your stop can be down there. And then, if you're getting, let's say, at 12.19, 12.18, like I said, there's still over $1,000 per contract. Huge move. Again, super shallow right here, followed by another shallow here. Now, watch this. See this guy right here? It moved up from here to new highs with a shallow, but there is no measure move within the measure move. It's a bar-to-bar move. Okay? So, right here could have been a long for a pop. It's the measure move within the measure move that would kill the here's another measure move within the measure move. It's a shallow guy, right? So this one had a lot of bullishness up there. Yeah, I just got scared with how strong that was heading into the zone. Well, let's talk about heading into the zone very strong. Now, it can run, but it can't hide, because as it heads into the zone real strong, when you have 3 or 4 or 5 461s hanging on like this, off of deep, locally speaking, this is combo C. If this happens to be at the 78, strangely enough, it can, it'll hold. You can get some heat, okay, and slide it around a little bit, sure. But in a sloppy sort of way, and I'm going to go back here and tell you what I mean by sloppy. Some bigger 461 is kind of holding that zone somewhat. This guy here, okay, he's stretched a little bit, and this guy here, He's down here. So somewhere between these two guys. Okay. This zone here is being sandwiched by, and again, this is not like the dominant or anything. There's a couple of them. This is deep. This one's not so deep. Now I'm not taking these guys into consideration. Well, should I be? The fact that these guys are here, his leg coming in, that was a ticket. This did not give us a clean secondary entry, unfortunately. The breakout above here would have been also pretty good, okay? But this move up over here is still only a 38% move of the entire range, okay? So this has, here, let me go back to the a bigger chart here, 60-minute chart. So all of that is happening, again, right around, maybe stretched out a little bit, the 78% zone. And again, that was good for a 38% bounce. Again, that's a $10 bounce. Like I said, even if you take half of that, that's still, good risk-reward ratio. Hello? Can you hear me now, Sean? Okay. The reason why I did not take some of the earlier extensions is that there's a whole preponderance of local 461s in that configuration. That configuration is a very, very good one. Okay. Now here's a poor man's version of that. This is a poor man's version. This is late in the day. Okay. Why is this a poor man's version? Here's a 461. Here's another one. Here's another one. Okay. You could take an average here and buy for this thing. But look at this. This is not deep. This is double top. This is shallower. And then we got shallow here. Right? So we have mixtures of deep and shallow. But if this guy is deep, 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 and deep, like 3 or 4 of them in a row, and it makes a strong downward move or an upward move, that's when you see blow off. What do you call that? A fast move out of nowhere and then a collapse. A big fast drop and then a bounce. Okay. If 461s off of deeps are reached that way, that's one of my favorite patterns. Now, going back to what is GC for? This is the COMEX Gold, the January contract. I'm sorry, February contract. Okay, GC means gold, COMEX. This is gold. G is the month of February 2014. This is the gold. Crude oil. Couldn't those logos just be signaling a larger retracement? A larger retracement. What does that mean? Larger, what is a bounce? Down. Couldn't those logos be? Well, let me draw. Deep. Deep. If you have this, and then that's normally on a bearish market, okay. Then boom, like this. This is normally a thing that can bounce it right back up. Because you're coming off of 3 deeps. Okay, so this can bounce it right back up. Now because this is deep, deep, and deep, this will yank it up pretty deep compared to the beginning part of this zone over here. Okay, so you could bounce it up to where? To the 70% of this thing. So it can go from here up to here. But depending on how it comes to here, it can go a lot further. Not going to do this and then that. Is that what you're asking, Sean? It could, but you want to watch this leg here. Are there a lot of deeps and chops here where this is a combo C after it zig and zag its way up here? Or is this going to be bar to bar? Or is there a super shallow between here and there? If there's a super shallow between here and there, then this is going to keep on going. Between here and, let's say, here. Okay, now, what does that look like in the real life situation here in gold? Well, here in gold, here's what it looked like. Okay. It moved up here. Now, I'm supposed to look for a higher high, lower low, and then buy and pull back. It did a double top. Okay. It pulled back over here. And what does this look like? Well, what I'm asking in particular is this. There's a 2-bar wide time range here. Okay. So what I'm asking, and this is why I'm on the 1 minute chart a lot. Okay. How deep is this dominant that we made once we get above these highs here? Well, the dominant is just shy of 61%. How about this guy in here? He looks awfully shallow. It's actually, you know, I'm trying to call it a 2-bar wide time range, but it's really a inside bar only. See that? That's shallow. Everybody see that? Shallow? It's a little bit more than 38%. It's not even 50%. It's a 2-bar wide guy. Not even 50%. What does that mean? That means that once it gets above here, we're coming off of measure move within measure move that's shallow. The dominant is medium. What's the next one looking like? I'm going to trace it out for you. In lieu of calling it a bar-to-bar move, I'm going to force myself to see it as a measure move here. Well, how deep is that one? Super shallow. So the medium dominant, measure move within measure move starts out less than 50% and then super shallow. The next one here is still medium. By the time it got above here, it's a wider time range. So that scenario of it going up to roll over is not happening yet over here, Sean. Okay. Now the key for me is that now when I was looking at it, I was right around here. Should I jump in and market? Now that would mean to stop below here. That's still, you know what, in hindsight, that's still not too bad, considering that if I see shallow, shallow, super shallow, there's a lot more to the north side. But it's these guys right here that I love. This is a deep, and this guy has a lot of help from these other guys. If we find something like this coming into any larger combo or 78, I'll be all over it. We haven't seen that too much lately. Now, another thing I want to say is that this is a narrow time range. This is same as this. These are all in line, okay? It's not like suddenly these guys got wider. They're all pretty much kind of in sync here. And again, this zone is a 78% from the larger chart's perspective. So you want to see some of these smaller 1 minute chart confirmation. Do you always get it? No. Okay, this upward move is a little bit scary to short. Now here's what I did. Well, I did get short. This thing moving up. Let me zoom out. 15-minute chart. Okay. Now here's my thinking. I'm on the go still. The dominant is not very deep. obviously, from that high. Okay, so we're dropping off with a shallow, or here shallow. So this bounce would be a shallow bounce, 38%. Actually, 38, 78. 78 of what? I'm going to pick on this guy here, and maybe around there, okay? So around there, give or take, if this thing were to show signs of wanting to go back down after this move up. Now remember, it has to shake around and do all types of stuff to get rid of the bullish energy, because the transition isn't a sharp up and sharp down move. Unless you have this type of situation, the upside down version of this, okay? Again, that deep, deep, deep with a bunch of 461s, that's a sharp elbow. Strong down, strong up. So I'm going to pick this, not this high, but once this zone gets exhausted, it would want to make its way down. So this was late in the day. I didn't have anything except a break-even trade on crude oil, frustrated. So what do I see? Okay. So what I see is this upward move. Remember, not a very strong, should not be a very strong up move. In fact, let's talk about this move from here. This is deep. This is shallow. This is shallow. Sure, there's some deep between here and here, which cause a buy over here, but this is shallow. In fact, let me check to see if it's super shallow. Oh, borderline super shallow. Okay. What that means is when this thing pops up above here, this is on borrowed time, if you will, with the dominant being super shallow from up there as well, or shallow from up there. It made a move above this high. Okay. This is an important high. Here's a time range. That can it make it above this high here still? Well, the answer is sure. If it has a lot of energy up, it can. But this should not have gone above here. In fact, if I was long here, I was thinking about 1222, 1223 to grab profits. Okay, $4 or $5. That's all I was thinking about. Because this is shallow. Can it climb above there? The easy answer is that, yeah, if it's off of a super shallow like it did, it'll pop above there. If it's still shallow, it'll pop above there. But wait a minute. Once it gets around here, it's going to be hard to go above there. So what do? I'm not going to go short because I still see this as kind of a controversial thing. It looks like it's a wider. Look at all these measure moves within measure moves. And I'm thinking, well, let me see what happens. Well, as it turns out, this thing started to fall pretty strong. As I was watching there, almost done for the day, I saw this huge plunge. Now, this is where the bearish energy came back and took over. Even though it spent hours going sideways, and this is medium deep. But look at this, bar to bar, end to end, straight down below here, below there, below there. So I'm saying to myself, okay, there are no measure move within measure moves. I'm on a 1 minute chart. I don't see any. So I'm thinking to myself, let me think about going short. Well, where am I going to go short? Well, this is interesting. I can do a breakout. If this thing were to drop below here, well, it didn't go below there. Do I do a short there? No, it looks like it's a high, low, higher, high. Now, there's a deep measure move within the measure move here. This didn't get anywhere. I don't expect this to go anywhere, but this could go a little higher. Again, the move from here, bar to bar, there's a little, what do you call that? Is it a 2 bar? Okay, anyway, about a 50% retracement, and then boom, 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 boom. So I said to myself, let me see how deep this guy is. This guy is just, barely over 50%, not 61%. But regardless, see, regardless, it's a bar-to-bar, end-to-end drop. So I'm saying to myself, well, could this go wider? And then as a 38% drop to new lows? Here's where a lot of the analysis of measure move within measure moves come in. For example, from here, bar to bar, bar to bar, bar to bar, great. I can go on a breakout short below there. but my stop would have to be above there. Okay. Now, it did not go below there. It started to move above. Well, it did not go above there, and it started to come back down also, as if to knock on the door to go below. Below what? Below this? Below that. Well, how is it going to make its way below there? If this was going to stay as a 38%, in fact, I'm asking the question, what does the supporting measure move within measure move look like? Well, the answer is super shallow. So here I'm going to take a breakout trade. So I did a breakout trade. Shorted right there. My stop is above there. Actually, my stop was above there. It can get ugly on me. Okay. But once this is A, B, super shallow point C below here, the downward move will take out this low. We'll take out this low. And now, yes, this is deep, but his supporting structure is super shallow. So once we clear here, I'm in good shape, right? So this was the downward move from here down to here. So I took about $3.50. Not not a whole heck of a lot, but it's the end of the day, and there was a little bit of move down there. And where do I get out? Well, I'm just eyeballing. I'm just going to grab it whenever, okay? So here's a shallow. So this guy is also shallow. I don't like to do breakouts, but sometimes I feel like, let me just take it. So there's a bunch of 461s here. So I sort of grabbed it before it got there. Shouldn't the larger super shallow, Carl saying, the dominant looks deep to me. You mean off the high here, Carl? This one here? It is medium deep. Which one? This one? This one? 1015. Okay. This took, okay, you're talking about these guys over here, right? I mean, like, this one here? This, I'm talking about this fresh high that we're dropping down ferociously. Okay. Carl was saying the dominant looks deep to me. And then Sean says, shouldn't that larger super shallow up have taken it higher? Oh, here? Super shallow here? This is Sean's question. Well, yes and no. Let me do this super shallow for you, Sean. Okay. Oh, okay. This super shallow here, super shallow. Oh, that's what I was questioning. Could it go above? Because there's a lot of deep measure move within measure moves, and it has no business being up here. This is one of those where if you did a breakout thinking you should go long, you'll be wrong. It was only a 38% bounce in a bearish drop. So this thing, I was watching this and see what the heck is it going up here? Is it going to continue going higher? Again, I can almost say it has no business being up here. But as I watch it go screaming down, I'm thinking momentum-wise, this is just a bear market rally. So I was watching this whole thing form, and there was a movement, okay? This was confusing. This was looking really good to break below. It didn't. It did this to do a wider time range. And in something like this, the easy answer, where you take profits, the easy answer is this. The dominant 261, okay? That's the easy answer. Well, in the end, actually it went lower than that, right? But the easy answer is the dominant shallow. This is deep. supporting structure, but then you get shallow, 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 sort of like a combo B right here. That's what you want to get out. But combo B with so many shallow, shallow, shallow coming down can only manage a minimum bounce. But getting out right around here, around the 26 area, is a decent bet. Now the kicker is this way right here, super shallow. If this thing had gone screaming down, I would have gone short also. But then, depending if it's bar to bar, or if I do a 2-bar white, super shallow, that can. I was talking about a previous high. Let me go back and see which one you're referring to, Carl. I'm on the 5-minute. Coming off a high is an ugly double top. This is a super shallow. That's right. See, this is a super shallow that almost appears like it wants to go higher and higher. But again, there are too many measure move within measure move that are deep, deep, and deep. So it's a kind of a mixed bag. Now, for those of you who were not watching all this drop and were to isolate only the move from here to here, as if it's a breakout trade, then that person will be caught on a false breakout. Wait, I'm going to go long here. Wait, what happens? Okay, so that's the tricky thing about not go long here, because this pattern is found in a very strange environment, an environment where a lot of shallows, from the previous high. Which high are you talking about, Carl? I want to see if I want to be on the same page with you. 250. 250. Oh, up over here. Here? Okay, this is a deep retracement. And then you follow by shallow. And then shallow. Okay. Right. And this helps to pull it up. But how it moves up is what you want to do. If that shallow down had confirmed without the deep measure move with the measure, how would you have entered? If that shallow would have confirmed. Oh, okay. Here's probably what I would do. Okay. Now, again, this is just trying to get something on board. If this thing had gone bar to bar right through here, like this, I can do one of two things. I can do the straight up thing. Now, again, that has to be bar to bar, and hopefully the bars are end to end. Why? Because that means once we break below here, we can keep on motoring down. Maybe not bar to bar, but maybe with shallows. But what I want to do a lot of times is this. Once it breaks below there, okay, I would quickly do this with my imagination. Okay, let me see what, okay. I would quickly put an order to short it, not on a breakout, but right about here, 38%. So even if it were to bounce 38% and then drop, I'm going to be closer to, the risk is smaller. So instead of doing a breakout, I'm going to let it bounce a little bit. How much? About a third. And then short it here, and then it'll continue. If this was a bar-to-bar cut through. Sometimes you don't get that if it's bar-to-bar end-to-end. But that's in lieu of doing a pure breakout and then taking some heat. Is that your question? Now, when I do that, I'm trying to get closer to get a smaller risk to reward. But technically speaking, you can go short one tick below here. But I found out that if you have any measure move within a measure move here, even on 1 minute, even if it's shallow, then the move down here would not cut through. It might come down, a little bit like this and then drop. Well, in that case, I want to short it on this bounce to not go above that high. How big of a bounce am I going to get? That is driven by how the move happens on the 1 minute chart from here down to below there. If it's a bar to bar move and the bars have very little overlap, then once it gets below here, it could be a minimum bounce only. So if it's end to end, the bars, which it looks like it was going to do that. So am I going to go short here and then risk going above here? But somehow this made a move above there, so kind of wacky. Now, of course, this bounce here, why? Why did this thing bounce over there? Well, 70%, right? So somehow this took it upon itself to bounce at the 78, even though it came down here bar to bar. Not that I would buy it at 78, because all the stuff from this high over here, strong down move, and then end to end bar to bar right here. This look at this. Look at these bars right here. It's partially due to these bars. These bars have very little overlap. Very little overlap. Okay, this has no business bouncing except for a 38% bounce. In other words, what the heck caused it to bounce from here upwards? Nothing. Okay, if it's nothing, then how big of a bounce can you expect? Oh, 38%. Even if this thing looks like it's going to do a higher high, lower low upward pattern, it just didn't go far. Not that I would go short here, but you know, I'm not surprised that it got killed at the 78. I'm not the 38. So I'm on a 1 minute chart, and I like these. This is telling me it's a fast move, as opposed to this type of thing, or this type of thing. I don't like this. This is good. It's this thing here that got me shorting here down there. Let's see, this is when it's moving clearly in one direction, down, end to end. We did not have that in the crude oil. Here's a 1 minute chart in the crude oil. Look at this. This is ugly. A lot of jaggedness. All right. So the jagged nature of crude was kind of tough. But having said that, let's take a look at the same type of, this is a little riskier, but here's a 70% here. Similar type of thing. How did it reach the 78? With some choppiness. But the key is from the 78, from this high here, down to this low that we bounce off of, the dominant is what? Oh, right here. Time range. Point C is not toe deep. The fact that I chop above this high over here, could it get above the high over there? Now again, this is not really the cleanest looking setup. It's almost like a secondary backhand approach, but this thing did work, you know. Okay, I'm going to stop recording here.